What's up, everybody? Michael and Coco here to do some technical analysis on the financial markets. The week just came to a close. We're going to be looking at the weekly charts for the S&P 500, the Nasdaq 100. We're also going to peep at the Dow Jones as well. We're going to talk about a few things, following up on yesterday's video where we discussed why I believe that there was going to be a technical rally. It seemed like we got a technical rally, but yet there's still a couple concerns that I have that this is actually the rally that I was originally talking about. It very well may be, but in today's episode, we're going to dig a little bit deeper. Let's get into it. All right, welcome back. Today is Friday, September 25th. We are looking at the weekly time frame for the S&P 500. And yes, as you already know and probably have seen, the market rally today from the S&P 500, the Dow Jones, the Nasdaq 100, had a little breather, a little sign of relief, which is nice. But in the overall context on the weekly time frame, this is the fourth straight down week here for the S&P 500. So maybe a cause for concern, maybe not. Where did we bounce from on this chart? Well, take a look at this green line right here. This green line is the 20 period simple moving average, and I like to look at the 20 period moving average because the 20 period moving average to me sometimes helps identify medium term to potentially longer term trends. 50 and 200 are the Godfather moving averages that I like to see, but those aren't on here. And then we have the black line right here. This is the 5 EMA, and the 5 EMA is one of those exponential moving averages that get tagged just so frequently. And when you get too overextended in any one direction on the 5 EMA, you typically see it correct itself fairly quickly to retag it. And where we closed today, well, we closed below on the weekly time frame of the 5 EMA, so we never recaptured that. That's not a bullish sign. However, the 20 period held as support. That is a bullish sign. We have the Fibonacci level right here, 23.6. The price closed above it, formed a nice hammer candle. That's also a bullish sign. So this right here looks like, yeah, we had this pullback, but this hammer candle identifies, hey, this might actually have a little bit more gas in its tank to move up a little bit higher. So overall for the week, it's closing, giving us signs that, hey, potentially we might see a little bit more movement to the upside. Is that going to happen? I don't know yet. It's a little too hard to tell, but these next 2 days, they're important. I mean, they can be working very hard right now to potentially bring out a stimulus package, which could very well send this market higher. And, it's just temporary fixed, in my opinion, until, it's temporary, the market rallies, but then it wants more anyway. So what can happen? We're going to be digging deeper in here, and I'm going to walk you through these charts to say, yeah, we saw this rally, but we didn't break out necessarily of some key levels. Now, if you follow, me on Twitter, follow other technical analysis people on Twitter, you've been seeing a lot of falling wedges. And I'm kind of redrawing out these falling wedges just a tad bit, because if I do redraw them out, you can see that they're still within a channel and not necessarily breaking out of the falling wedge, which it kind of looks like. So we'll get into that here. The MACD on the S&P 500 looks like it wants to start crossing over, and that could represent a little bit of bearish momentum taking place. Now it's way above zero. So, you don't need to hold too much weight on this. It could literally just cross and then return back up to a positive direction. But, it's something to take note of when we do get that cross. We are now on the weekly time frame pinned between the 5 EMA and the 20 period. So we might just go sideways until we have more of a decision, or we might get a little bit of a bounce and then potentially a rejection to move lower. This trend line right here, I'm going to talk more about on the daily time frame. So let's just go ahead and hop over to the daily time frame for the S&P 500. Okie doke. Here is the daily time frame for the S&P 500. This first pink box right here, that represents the first area of support that we were talking about. We said, hey, if the price continues to get into this area, it could very well offer up a good risk first reward trade where you can buy in and then have a tight stop loss. And I tell you what, man, from right here, it looks like it came down and touched the bottom of it perfectly, but it actually came down, I think it was 3210 was its low point, and we were saying, my eyes were on 3200, and we really rallied from there. Keep in mind, the falling wedge right here on the daily time frame, it has not broken above. On a good note, though, strong bullish action on a Friday, just a nice move to the upside on a Friday, could very well follow up that momentum going into next week. As we saw in the last week, we saw some downwards pressure on a Friday, and I was talking about, hey, this actually doesn't look good. It looks like we might have a continuation to the downside the next week. So what we see here is some bullish momentum to the upside going into next week. That's good. We recaptured the 5 EMA, but we're still below the 50 period. So that's has acted as support and it acts as resistance. So that's a big moving average that the price would have to get through. If we get a stimulus deal, I think that that's going to rally and that we're going to break out of this falling wedge. However, as of this particular moment, I'm not convinced that this is going to continue to the upside and just make some new high. On my thumbnail yesterday, I drew out a head and shoulders possibility. And what I did was I did a left shoulder over here, I did the head here, and then out more with a breakout, I started drawing out in another shoulder. That's my more longer term to medium term view. And if we start breaking out of this trend line and get above the 50, I think that we can head a little bit higher. I don't know if we'd be making potentially new highs at that specific point. I think there's still a lot of resistance up here. So we're going to have to monitor that one closely. But as I see it at this particular point in time, it's still coiling up within this channel. It has not been a confirmed breakout on this specific chart, which means we might very well head lower into this range still. Got to keep an eye on it. The Nasdaq on the weekly time frame here, they had a good week, right? We finished up 1.96%, so 2%. The Nasdaq had a great day today, and we just finished the week strong. We finished basically just above the 23.6% fib level. And, we're still coming up to, still a little bit of a down pull. This might be very temporary or it could be somewhat of a dead cat bounce. We don't know. We're seeing some signs of strength, which is good, but we still broke out of this channel. So when we broke down, this now is going to become a level of resistance. So even if we see a run up, it still has a lot of work to do into the end of the month in order to become more of a bullish looking type setup. And as I see it right now, a lot of market uncertainty. We're coming into our final week of September, heading into October. It's relatively a bad month. I think volatility is continuing to pick up, and we still see, like I said, a lot of uncertainty. So still, it was a good day. It was a good week for the Nasdaq, being able to come back a little bit here. But still, I'm still not convinced, and we'll get into the smaller time frames here in a moment. The MACD just recently crossed over, and that's one sign right there saying, hey, maybe this might just be a little fake out boost to the upside. Maybe people are thinking right now these buy the dippers are stepping into the market right now and saying, we might be getting a stimulus deal. I'm going to be going long into the market right now. I think things are going to go good. We did have Johnson & Johnson come out today with some vaccine news, and right around that same time that they launched that news, we did start seeing the market rally. Not necessarily that's the reason as to why the market was rallying, but it's possible. I mean, it's happened before, right? Here is the Nasdaq 100 on the daily time frame, and notice how it's drawn out. We're breaking out of the rising wedge that I drew out. So this is a bullish sign, right? Well, this is why I kind of want to tell you that I'm not fully convinced yet, and you'll see this on a couple of my charts here as we progress. But falling wedge I drew out, and we're starting to see a breakout. That's a good sign. So this very well might be a very nice breakout. We have the MACD right down here looking like it wants to start curling up and potentially move more to the upside into some sort of area of resistance, which we'll get into on the lower time frames. We recapture the 5 EMA. We have not recaptured the 50. And the 20 period right here in the middle of the Bollinger Bands is right overhead. So we have the 20 period coming down into the 50, areas of confluence, right? Areas of resistance up there. And we have the price action trying to break out of this rising wedge. But this is where it gets kind of interesting. Watch what happens when I just redraw this out a little bit. What happens if I actually put the line right here and then I reconnect it from this level? Now we just have a down channel and we don't have a breakout. And not only do we have this trend line going downwards, it's confluence right here with the 50 period moving average. And then you have the 20 period. It's very hard to see, but it's in the middle of the Bollinger Bands, right where my mouse is, like that, sloping down. And then if I do this, it's a perfect down channel. So this right here, a lot of traders were drawing it out as a rising wedge, and they might not make these adjustments. So we might have people entering into long positions, and I'll show you some things that some of the indicators that make me think like, I don't know, maybe this is just a fake out move right here. I knew that a rally was coming, but I'm not fully convinced yet. I'm not fully convinced at this particular point in time. And what could potentially happen is a breakout of this channel or a breakout continuation of the rising wedge, which would give confidence to people. And that confidence could be false confidence. One of the Twitter posts that I posted a minute ago, or on one of my rants, I was talking about, don't believe breakouts right now. you know, because they can very well be false breakouts. You need to trade cautiously on these breakouts. And I saw it on an Apple trade this week. I saw the falling wedge. It looked like it, you know, we gapped out of that rising wedge. It was looking really good, and then we just started dropping like a rock to the lower portion. And it's just been this massive just chop fest. And if you look at this channel, it's a chop fest. You know, boink, 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 boink. Why can't that continue? I don't see why it wouldn't continue. So that's one thing there, okay? Nasdaq 100. Here's the Dow Jones. I didn't map out any levels here, but I will show you on the daily. But really what I want to show you, this weekly candle right here bounced perfectly off the 50-period moving average, formed a hammer candle, but we didn't capture that 5-period moving average. This, I mean, looks nice on a pullback, but very well, you know, might bounce a little bit up more, but very, very, very possible that it can continuation to the downside. If we close below this hammer candle next week, I think that we still have more downwards movement, down probably to around this 200-period moving average. Let me show you the daily time frame though. Here is the daily time frame, and the daily time frame, yeah, we broke out of this rising wedge, and now we're forming a falling wedge. Now, when we broke down through this, that's a bearish sign. We kind of trailed up, and then we were moving down. But if you connect from up here to here, and then, you know, from here to there, we've seen a nice falling wedge, and falling wedges are bullish. However, you know, the 50 period is still overhead, which is not a good sign that it can act as an area of resistance. I mean, even on the daily time frame right here, like, look at this. You have a left shoulder, you have a head, you have a left shoulder, and then you have a neckline basically at the 200 period moving average, right? So if we start closing below that, I mean, this does look like a for sure breakdown of this rising wedge. Going to be keeping an eye on this one as time progresses. Let me show you the more zoomed in time frames of the S&P and the Nasdaq, and then I'm going to show you some of the indicators that I'm looking at to kind of make me think like, you know, is this actually the rally that's going to happen? Are we going to see continuation to the upside, or are we going to just see a false breakout, more downwards pressure until we actually hit a more significant major area of support? So here's the S&P 500 on the 2-hour time frame, and I redrew this out. Posted on my community tab the other day. This trend line was actually running into this level right here, and it would come down to here, and then it would look like right now that this would actually be a falling wedge, I keep doing that, breakout. So that would be a bullish sign. I redrew it out to connect the centerpiece, this pivot point, to the top portion of this wick, right by the 50 period. So the 50 period acted as resistance, this trend line acted as resistance. So I'm reconsidering this. We still have this gap right here, this gray box is a gap up at 33.80, and we're sitting right now at an interesting area, and we'll go to the 30-minute time frame in a moment. But we bounced from the lower portion of the trend line, we're moving to the higher part. We kind of got rejected there a little bit, and then we have this little death cross taking place, which you don't need to hold, you know, too much weight on. But the 50 period is resistance, the 200 period is resistance. So what can potentially happen? Well, we might get a breakout of this, but it's very likely with this overhead resistance and this downwards pressure that it could be just a false breakout. So you got to trade this with caution. If you're in a long position and you get some sort of gap up, I mean, think about what happened to Apple earlier this week. You had the gap up out of the rising wedge, and then it just started falling down. So I'm not saying that that's going to happen, but what I am saying is if you are in long positions, why not scale out and, you know, capture some profits before, you know, potentially getting rejected from this area and heading lower. We very well might go higher, but, you know, why not guarantee profits, you know, versus risk, you know, the chance of losing them altogether? That's just my thought process. Here's the 30-minute time frame, and this chart's going to be linked in the description. So if you want to see these areas of resistance and support and map your trades or use this as a guide, by all means, bring it up later. We have areas of resistance up ahead. We have a couple areas of support that I'm keeping an eye on. And really today we just rallied right up, you know, a little bit of a down pull, moved right up, right through the 50 period. It didn't even hesitate to do so. And that's a good sign for the bulls, you know. However, look at the RSI, where it's at. Up, it came almost up to overbought territory, and then, you know, a little bit of a downtick there. The MACD, it just got fully above zero, both lines. That's a bullish trend. That's a good sign. But we're running into some massive areas of resistance. One, the level right here at 3,300, really. 3,300 to 3,305 is a level of resistance and kind of a psychological level. And if you look back in the history of the chart, right here, boom, it bounced from it and then gapped through it. Here, it got rejected. Here, it finally broke above, but then came down recently. So 33.25 is that next level. And as time progresses, this 200 period moving average, you're going to see it go lower. and you're going to see the 50 period go up. So there's going to be a time potentially where you have the 50 or the price pinned, tighter and tighter between the 50 and the 200, and that coil could represent in a big move into either direction. So the 200 being up here sloping down lets me know that, hey, there's a lot of work to do still. And I feel more confident if they can overtake that and close above it. So 33.50, then I would say this does look more like a falling wedge breakout. So that's a good sign for the bulls. On the Nasdaq, this is the 2-hour time frame. I did not change this chart. We did break out of this channel, and that's a good sign. And we recaptured the 50. The next spot is the 200. Now, there's a lot of different levels of resistance up ahead, particularly 11,500. And then this pink box right up here comes all the way from 11,750 up to 11,850, so about $100 right here. I mean, that would make sense on a channel breakout because we pulled into it. Clearly, the length of the channel right here, if we break out of the channel, it would put us right around there before hitting into these other areas of confluence. So we have this pullback right here into it, and then we had some chop right up in here, and then clearly this trend line. So the trend line can act as support now on this breakout. If we get a continuation, we have the 200 period overhead, clearly acted as resistance. I mean, you can see that right here, boing, got knocked down. Right here, it didn't even want to test it, gap down. Another thing to watch out for, though, is not only we have a 200 period overhead, we have this gray box. And this gray box is a gap that has yet to be filled. So gap windows will act as areas of resistance and or support. So if you get a price that gaps up and then all of a sudden the price action comes down into the gap, that can act as a strong level of support. I like actually trading those type of trades. On the flip side, we are below the gap. And if we start coming up to close the gap, that then can act as an area of resistance. You tie that in with the 200 period moving average right now, that to me, is some very strong levels of resistance up ahead. So this very well might get rejected and head lower. So that's another thing that I'm kind of like, okay, I'm not getting too excited about this breakout. I still feel like maybe this could be a false breakout, and then we could coil in tighter to those, the S&P 500, for example, that falling wedge. I keep doing that. Here's something somewhat new. This is the Cohen High Low, and I'm just showing this because I'm stacking with the NDX right here, and this red line at 0.37, I think it is. When the price comes down here and just taps, just line it up right vertically below of the NDX. Typically, if we get pull downs to these levels, it doesn't last there long, and you typically see some sort of, bottom or potentially buying opportunity. The price of this chart currently is at 0.54. So a long way to go to the downside. So I'm not really, using this that much, but I will keep it in the back of my head, because if we start seeing it move lower to these levels, that might represent, okay, this could be potentially bottoming out here, and that could be a very good buying opportunity. So I'm going to just keep an eye on this one in the back of my head, and I'll bring it up on another video if I do start seeing it really creep into those lower levels. This is the Nasdaq new high, new low chart, and we're talking about this as an indicator for panic selling. And this red circle here, actually these red bars were within it. Now we're starting to see little spikes below it. So that's interesting that panic selling might be picking up just a little bit. And, there's a little bit of a lag time, actually quite a bit of a lag time to all of this. So I'm not holding too much weight, but this shows me that there is a little bit of a panic picking up, but nothing in comparison to what it was like here in March, here in the end of 2018, or even here at the end of 2015 going into 2016. However, when you look at the drop that's been taking place right down here on the Nasdaq 100, that's a huge drop comparatively to looking back over here at 2016, and even over here at 2018 to 2019. This is a significant drop, and I feel like there should be more panic, but there's not. And that's kind of my thought process, where I was thinking that it looks like a rally could take place. I think that we still have a lot of buy the dip mentality out there. So we're kind of seeing that. Now, the bottom fisher indicator, this is to help find bottoms in the market, and it's not always 100% accurate, but I'll be honest, it's pretty darn good. And when we see this green line cross back over the blue line, at least when it's below this black line, That's a lot of lines. Sometimes it can represent a market bottom, and I'm looking at this right now, and both lines are below this black horizontal line, but the green looks like it's picking up more speed to the downside. So I'm not fully convinced that this might be the market bottom. Yeah, we might see short-term bounces, right? We might see short-term bounces. But on this indicator specifically, it's not saying that this right here is the bottom, which makes me kind of think, yeah, we still have areas of resistance up ahead, and there's still a lot of market uncertainty. So what is taking place right now in that bounce? I'm nothing. It's not, the bounce right now is not really lining up for me from a technical perspective, unless, there's some sort of inside information going on right now that I just am not aware of, and the technicals are trying to tell us, no, there is a stimulus package coming out. The market's about to rally, and it's going to be set to a higher level into the next area of resistance. But from my point of view, I don't see that yet. So I'm hesitating on calling this a breakout. I'm considering this just a little bit of a relief rally in the meantime. The S&P 500 on the weekly looks like, it looks like it's going to bounce up. So we'll see. But I still feel like it has the potential to drift a little bit lower. Maybe next week. Maybe not. I don't know. But I will be looking at some long setups, because if this does start moving up in the upwards direction, I'm obviously wanting to be a part of that. So keep an eye out for the weekly scan. I'll be bringing that in here on tomorrow. I post it on Saturdays. The US dollar index is very important. The reason why it's so important is because you can see correlations, inverse correlations with other assets. I still think that this whole run up right here is applying pressure onto the equities market. And, we had a decent day today. It was somewhat flat, but it was decent. The day before, we got hesitation in this 23.6 fib level, and that was clearly an area of resistance. And we didn't really close above it. We technically did by 0.04, I guess. I'm not convinced as that being a full close above it. And if we do continue to move up, this level's not too far ahead, 38.2. If we start seeing it move higher, I do think for sure we will see pressure to the downside on the equities market, and also gold, and also silver. Right now it broke out. This could consolidate for a little bit. We've seen that happen already previously, and it's kind of forming this, nice basing pattern right here. So there's a lot of good things going for the dollar, but I don't think it's just going to be one straight movement to the upside. I think we're going to see obviously some short-term corrections. When you look at the RSI is moving into an overbought territory, and when it gets overbought, as it did here in the middle of March, you get drawdowns. Even before that, when it got overbought in the middle of February, you get drawdowns. So it hasn't been overbought since middle of March, and we're starting to get overbought at obviously just a much, much lower level. So as far as the dollar goes, yeah, there's still some upwards momentum to the upside. RSI indicator can stay oversold, overbought for periods of time. And right now we're kind of consolidating sideways. So if we do start moving higher, this is going into overbought territory. We'll probably see some sort of, price fluctuations, some consolidation until we re-level back out, until maybe another leg higher. But 96 is the level, the next level to keep an eye on, really, because if you want to go short the dollar or, go long gold, you can play that play. You'd want to get in to gold when the dollar comes up to this range. That would give some more value to you, because there's clearly going to be resistance up here. I got gold when it came up into here, and then when it came up to here as well for the dollar. But I was looking at the levels on my gold chart, specifically breaking down from that descending triangle. The 10-year yield, Treasury yield index here, the TNX, down a percentage point today. It's been really just tracking sideways within this symmetrical triangle right here. And this down day, while equities had a pretty decent up day, has me a little bit concerned. I feel like what I've been saying is that we can see a squeeze higher, but if we start seeing the market roll over here soon, that's not a good sign either for equities. I feel like that would be telling us, if we get a breakdown from this and maybe move lower past the 50 period, maybe back into this lower ranges, I don't even know what to say if we get back into the March lows. But if we do start seeing that kind of come lower, that's gonna signal some stress in the near future. You want to pay attention to the bond markets, because the bond markets, they don't lie. when they start pricing in, at lower percentage points, they're telling us that, hey, they expect future growth of the economy to be down. And durable goods came out today, and durable goods printed, I think it was like a 0.4 or something like that, and the number was just very weak. And durable goods are important because it's like an economic indicator, right? It shows us what production is going to be looking like. And when we see a low number, inventories can get really stacked up, and it's kind of telling us that, hey, manufacturing could be shrinking. And Google the durable number so you can kind of get more in tune with it. That was just a really brief description, but it's an important number. The market rallied on a pretty bad number, so there's just a lot of things not making sense right now, and that's why also I still have hesitation on this specific rally. NYMO indicator still printing a negative breath, minus 37, saw a nice little uptick, which makes sense because we had a decent day today. However, you look right above you see the S&P 500. We have this little dashed line. It's an area of resistance. We might very well, we might spike higher, right? What if we spike higher up to this zero and it was something very similar to what we saw right here? Right there we were saying, hey, when it gets right above zero, that could be a good short entry. What if we spike right above zero, running into this level of resistance right here and all the other confluence of resistance that we've already been talking about? That can also be another potential good entry point for a short position. Or, potentially we just blast right through that. Be careful, because who knows what the market's going to bring us over this weekend. This weekend is important. This week was important. And my kind of overall thought process of what can happen is, well, we had the presidential election debates on the 30th or the 29th or something next week. And, who knows what's going to happen with all of that. And if somebody flubs on it or something bad happens, I feel like the market's going to respond and act in a certain way. That's, I'm not much into the politics of the markets, but the politics are definitely into the markets, and they do play a role. Clearly, they have played a role, but it does wash out over time. So in the short term, if we do see some flubs or some weird stuff take place, polls go a certain way, whatever the case may be, or stimulus is passed, then very well we might see short-term spikes either to the upside or the downside in the market. It just depends on what that news is, right? Depends what the news is. I'm over here looking at gold now. This is a descending triangle. We broke down from it. This area of support, was the original breakout area right around 1770. So we very well might go retest those levels. I'm looking at 1815 to 1800, maybe even a little bit higher, to be honest, just to make sure that I can get some if it does pull back to these levels. It looks like it's kind of grounding out right here, but this could be just a bear flag to another leg lower, especially if the dollar keeps going up, which would, I'd be okay with if the dollar kept on going up, because that means I can get gold for a little bit less of a cost. I would like that. I would much, much, much appreciate that. The RSI indicator is moving low, 35.47. If it goes into oversold territory, that's a good sign for the bulls, because it's showing us that, hey, we might be seeing some spikes take place. Now, it doesn't, like I said previously, it could stay oversold for a long time. You can get breakdowns when RSI indicators are oversold. So just because it goes down there doesn't mean, the market's going to take it up. That doesn't mean that, but sometimes it does. As I see it, I have my order set at 1800 to 1820. I posted a tweet today, and I want to talk about it right now. So here's the tweet that I posted. This right here is a chart of the the house prices over the gold ratio. So it's basically showing us that the numbers on the right-hand side are how many ounces of gold it costs to buy a median house price. And what I wrote was the median house price, according to the Fred data, it's currently around $320,000 for a medium home in America. Gold is trading at about 1864, so that means it costs approximately 172 ounces of gold to buy a median home. This is why I love gold and measuring things and measuring different aspects in gold, because I feel like gold is real wealth instead of measuring it in terms of dollars. Dollars is just a currency. It's a fiat currency, and it loses purchasing power, especially when the Fed is targeting inflation. Inflation, has been defined as the expansion of the money supply. And what happens when money supplies expand? In simple terms, when the money supply is expanded, the effects of that leak into other prices, making them go higher. right? So look at the stock market. We have QE 1, 2, 3, 4, asset bubble, right? The stock prices are going up. Now people are saying it's deflationary. And there's a great debates about inflation and deflation and this and that. And right now we're in a more deflationary pressure environment because rents are going down. Heaven forbid that rent goes down in America, right? Now it's not good for the landlord, but it's good for many, many people in America, obviously, when you see the price go down. But if you look at the CPI for consumer beverages and food, it's like at 15%, a huge spike up in inflation or in the cost of goods and services. But this is the housing, okay? So this is housing. And what I did was I just looked at 2015. You can do math on other areas, but what I wanted to point out was in 2015, it cost approximately 300 ounces to buy a median home. Today, today it's 42% less. You just got a discount for 42% on the pricing of homes. Now, if you were just saving dollars, US dollars, it costs you more. It costs 11% more than it did in 2015 to buy a median price home. You tell me, what makes sense here? In my opinion, in my head is, first off, if I owned 300 ounces of gold in 2015, I'd be like, okay, I can buy a median price home. I'm pretty excited about that. But in 2020, if I still had those 300 ounces, I can almost buy 2 houses because it costs 42% less for the same amount of gold. Crazy. Who knows where this is going to go, but how do I see it kind of playing out? Well, first off, there's many people calling that there's going to be another housing crisis. There's going to be pressure on the housing market. And if that's the case, which I don't know if that's going to be the case at these particular point in times because there's all kinds of weird bills that can be passed. We have, one, all this forbearance stuff. Who knows if forbearance, how long that's going to last, but I heard somewhere that it's going to be till like March of next year. Okay, so March of next year, you have forbearance expiring. And don't quote me on the exact date. I don't really know. It's just I kind of remember this. But if that's really the case and you already have delinquent payments on the rise at like 10 or 15% delinquencies, then you have 5 to 10% of America on forbearance. Don't quote me on these numbers, but I know that they're darn near close. What happens when forbearance goes away? Well, these people are going to owe that same money back in a couple of different ways that, they could pay it in one lump sum, which they won't. I don't see how they could do that. Why take forbearance if that's what you were going to do in the first place? But then it gets tacked on. So I can only imagine that delinquencies are going to increase. And then if you see the prices of homes start to go down, you're going to have people just in complete negative equity on their houses. So you see the price of homes go down. They're upside down on their homes. So what do? They bail. They leave. Housing market goes down. Now, I'm just talking from a very broad perspective, but let's think of this. If you own gold, okay, and gold goes up with the price of inflation, and you have home prices go down, where's this chart go? Well, the chart goes down. This looks like a big dead cat bounce. It goes boing, boing, push, back to the 1980s. What if we get back to the 1980s level? Now, in my personal opinion, as I see it right now, this can't play out in the short term. It might, but what I think is going to happen is I think we're going to see gold rise, but I think we might see home prices rise too because of how interest rates are currently being handled. Now, anything could happen at any time, sending this market completely downward, so I can be completely wrong. But I think that the good bet and the good value between buying a house or owning gold to buy, more of a house, or owning a house and then saving gold to potentially buy more real estate would be a very good investment just looking at this. Imagine having enough gold over here in 2000 to buy a house. But you're like, no, I'm good. I'm just going to hold on to my gold. Well, now with that 800 ounces, you can now buy 4 houses. So pretty crazy to kind of just look at this and measure it in terms of gold. You can break this and look at it any way that you want, but keep in mind this chart could still technically head lower if house prices rise, but gold rises faster than the housing prices. And I think we're in a position to see gold outpace the pricing of homes. I got way on a tangent right there. Let's go ahead and look at silver. Here is silver, and got this trend line right here. We pulled back to, this is a bear market. It was as high as $29, $30, and we're trading down here at $23 right by this trend line. Looks fairly weak, but it does look like it's kind of ready for some sort of technical bounce. That technical bounce very well might be a dead cat bounce. So we might go boing and then fall lower. but we will see. This long upper wick here, now we have a higher low and about a matching high right there. So this could just coil sideways for a little bit longer, but it's still holding on this trend line. So there's still hope there. And then we have the RSI coming into that oversold territory. Silver might be setting itself up for a move up to the upside. We will see. Maybe this is just a trend line like a head and shoulders. We have a left shoulder kind of like that. You have a head there. Maybe we're going to, run up a little bit higher, make a right shoulder, and then potentially break through the trend line. I don't know how it's going to play out, but I'm a fan of the precious metals. Precious metals overall, to me, look like they're in a bull market, and seeing these type of corrections makes sense to me. So, we'll see where it goes in the near future. Here is Bitcoin. Bitcoin had a big day the other day. I didn't post the chart, but the reason why I didn't is because it held 3,200, and then we saw just nice big technical move to the upside. 10,200, sorry, is the level of support, and then right below that is 10,000. This, might be a dead cat bounce, might not be. So we saw this pullback, and now we're seeing this kind of rally right here. We still have overhead resistance up ahead. We have the 11,200, and we had the 50 period sloping down. I'm not convinced that this is, a breakout moment here. I'm waiting for more major levels to say, okay, that makes more sense from a technical perspective to enter into. But right now, this is not a good risk versus reward trade. It just doesn't make sense. If you enter in right here at 10,702, where would you exit? Would you exit here at 11,000? Would you exit up here? Well, you have this overhead resistance. Why not just wait a little bit longer? Or wait to see maybe if we do pull back down to a 10,000 or another next level of support. So right here in the middle of this pullback, it doesn't make much sense to me. This could very well just be a failed bounce. We came up here, boom, we bounced, right? That's one bounce, boom. Two, another bounce. We don't know if this bounce is going to be a higher high, which would be good. That would be good for the bulls. But if it's a lower high, that's not the greatest sign. That could be just mean that we're kind of curving out to potentially move lower. But I don't think the direction on this is going to change until we recapture the 50 and recapture 11.2. And from that point, we will see what takes place. Last, I just want to close on the banking index. This is, once again, the BKX, the KBW Bank Index, largest U.S. institutions, 25 of them, down 6.81% on the week, broke down through the symmetrical triangle. This is pretty bearish. Now, there's more banks that you can look at. You can look at, these are like the large institutions, but you can also look at the regional banks. And the regional banks have been getting hit hard too as well. Here is the KRE, and the KRE is the Regional Banking ETF. And this is important because this is like the everyday bank. This is a lot smaller than, the banks like Bank of America, JP Morgan, Goldman Sachs, Wells Fargo. These are a lot smaller. These are like, call them the mom and pop banks. And this, very similar type pattern, but, took a bigger hit than the big banks, down 7.23%. The MACD looks like it's about to cross over. This breakdown looks very weak. If we don't start catching a bid in the banks, the financial sector is going to get a lot more pressure, because this looks like it's going to be, from a technical perspective, continuation to the downside. Now, this is the weekly time frame. So we'll see intraday bounces. Yeah, we saw a little bit of an uptick right here around 33. Boom, pressure up. And we might, come bounce up, retest this trend line. And if it acts as a resistance, that's not a good sign, because then we might really start seeing the pressure to the downside. But, like I said, it represents the economy, these smaller banks. And, if lending gets tighter, if credit gets tighter, that's not a good sign for these banks. How are they supposed to make money with interest rates so low and stapled to be so low? I don't know. Just thinking here, just trying to think out loud. It's good to look at the everyday sort of, economy stuff. And this would represent that more than, obviously, the Wells Fargos of the world, JP Morgan, Goldman Sachs, on the bigger U.S. institutions. So I just want to bring that up to show you as well. That's all I have for you on today's market brief. Now, it went a little bit longer than expected, and that's okay. That sometimes happens. Most people won't watch to this level, but if you do, Coco wants to say bye. Have a good weekend, everybody. I will be back tomorrow, Saturday, on the weekly scan. So if you want to check that out, make sure you tune in. Make sure you tune in. All right. Goodbye.